Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having an amazing day. Happy Thursday to you. Nice bloody red day here. And I get the question right now a lot, why am I so happy? Well, I'm happy in the sense that we took some healthy profits, of course, to the downside as a community. And a lot of our swing trades are still safe. So, 57% from SHIB for a nice little short there. Again, these are only 5x trades. We're keeping it kind of safe. But ultimately, we took 20% from HBAR as well. But the key takeaway here is that we saw, what is it? How much, $583 billion yesterday and a $1.2 billion just a moment ago here when the price tanked to 27.6. Okay, so there's a lot of money coming in the market and selling, and that's just kind of one of those selling pressure things. But regardless, I am, again, content with this price action, not just because we took some nice shorts, but mainly because we took, I was able to kind of add to my spot position and average my Bitcoin price down. So it's kind of nice. I like that. Another thing to kind of recognize too, and we're going to talk about this as well, Bitcoin dominance is down and the price of Bitcoin is down. Okay, so when those two things happen, we should see altcoins start to stabilize. It's kind of what we're seeing now, because previously we saw alts coming down because Bitcoin dominance was stable and Bitcoin price was down. Okay, now we're in the second phase here where the next step is for Bitcoin price to stabilize, preferably in the 27,000 range. And then, of course, the price action to increase for alts. So just know we're not like, it's not like it's alt season by any stretch, but it does imply that altcoins should start to surge upwards now based on that whole cycle coming through. Okay. Again, we'll talk about that and we can kind of look at this, but you can see, of course, altcoin dominance is up, Bitcoin dominance is effectively down. There's a lot of reasons why taking some late shorts right now may not be appropriate. And I'm kind of speaking to some of my community members too in that sense, because I got a question like, hey, should I start to short? Well, yesterday and the day before would have been a better time to short. I know hindsight's 20/20, but that's essentially the case. All right, so we'll look at that. One last thing, quick favor, if you could help us grow our Discord community. We have an awesome group over here, and I greatly appreciate everyone kind of interacting and stuff. And I tell you what, it's a fun little experience, and I love to be able to kind of stay in contact with my community. So if you want a better, more, I guess I wouldn't say legitimate, but it's a tremendously easier way to communicate with like-minded individuals. Link down below, free Discord. Love to check that out with you, and of course, learn and grow together. All right, so check that out if you haven't already. Greatly appreciate the join and, of course, the interaction as well. So what we want to talk about is a few things. We've already kind of addressed the Bitcoin dominance cycle situation there, right? Because, again, Bitcoin dominance is effectively down. Altcoin dominance is increasing. And, of course, what we should expect is the price of alts to start to increase now they've bottomed out. Now, again, this is a sea of red for the most part, even still. Okay, and I think if you take a look here at my Twitter, there's a tons of top losers here. Again, SHIB, Comp, CFX, BCH. A lot of these we've previously shorted, and I can tell you that those coins are going to recover probably a lot quicker than Bitcoin right now. And the main reason why is because, again, we got that cycle that's coming through. That said, though, what does that mean for Bitcoin? Because we're not here for altcoins. We're here to kind of understand what Bitcoin's going to do. Well, there's a few things that we need to talk about. First thing, we'll just kind of talk about the obvious elephant in the room here, the fair value gap we can see right here, ranged all the way down about low 27,000. So I would expect the worst and hope for the best. My grandpa always taught me that, and it's important to understand that in situations like this, it could always get worse, but we got to remain hopeful and positive. Okay. That being said, try to be keep your head on straight. I get that hey, we had a small liquidation from our Bitcoin long too, but those shorts that we had offset that. Okay, so again, no one's perfect. You got to recognize that you take some wins and you take some losses. And in this case here, though, with the wins or the way that we can win the situation is to expect the price to come down a little bit lower. That being said, we got the 200-day SMA kind of hanging out right at the low 27,000 range. Fair value gap is in this range. Something to note that's important with fair value gaps, a lot of times they'll get tested for the first time, not get fully filled, and then eventually get filled later. The reason why I say that is because you can see some examples in the past if you look at the history. Like, take a look at this previous fair value gap when Bitcoin gapped up from 25,000 to upwards about 28,000. Okay, we had this massive fair value gap in this range here. The price came down to wick down to this fair value gap. People thought that everything was all well and good. We're coming back up. That's wrong. We had a descending trend. We got rejected off the 50. Price comes back down to fill that gap completely. Okay. So again, very well could see the same thing, right? So the price rallies back up here, little dead cat bounce, and of course comes back down, and then we see a rocket ship from there. So my speculation is we will see 27,000 tested now that we've broken below this key level, support. Obviously 29,000, we lost that pretty fast, but the 28.5 didn't hold up very well. We can obviously see that. Okay, now that we've understand that that's more of a resistance level, we got to expect the price action to rally back up to that 28.5 range, possibly 29,000, and likely get rejected once this new fair value gap is filled. Okay, again, it makes sense for the price to kind of do one of these and basically fake everyone out, and then once everyone's scared to death, they take off and leave you in the dust. Okay, so I'm going to be pretty heavy long at about 27K if we get that, right? No guarantees. Price could rally back from here and be all good. But I just want you to know that it's very common for a fair value gap to be tested a few times. And the very first time, the halfway point, it's almost exactly on key. So I'm going to be more heavy, long focused for the next couple of days/weeks, and then kind of just expect the worst, again, for the price to come down and lower. Okay. So again, just some things to kind of think about, food for thought, if you will, right? We always want to make sure we're educated. So here's another reason why we're probably going to see the price recover and bounce. Okay, we're at 30 on the RSI. This is very uncommon for the price action to be at 30 on the RSI. Last time we saw that, we saw the massive rally from 19.7 upwards to about 28,000 in roughly about 3 or 4 days. Okay, so again, 1 week's worth of trading, the price basically it increased by 30%, somewhere in that range. So I'm not saying we're going to see that right now, but there's a great chance we will see somewhat of a relief rally now that we're at that level, because the probability of going lower from here is less. Again, you got to keep in mind, when the price comes down this low, here's another example of 30 on the RSI, it might take a little while to stabilize. It doesn't always just have this instant increase, okay? So there's a great chance we'll be range bound between 27 and 29,000 now. Okay, there's a solid chance of that. But it's best to, again, expect the worst, such as a retest of 27,000 range, and then an increase from there, okay? So either way, we are diverging on the MACD, big surprise there. Things are looking fairly ominous, and generally speaking, we take a look at stochastic, we're still swinging down. Money flow index is super low. Okay, so a lot of reasons why taking a short right now that we're at the bottom, is not a great idea. Speaking of which, let's take a look at this high block capital data and kind of see what's going on. This helps us understand backwards, or back end stuff that can be sometimes backwards, depending on how you look at it. So we can see longs are just getting wrecked over the last 3 days. No surprise there. That's pretty standard, par for the course. We can see now that we're starting to see some long liquidation levels here between 26.7 and 27.1. So these are likely open positions for stop losses that are in place. So if the price does come down that low, they will effectively close out. Okay, so again, for the most part, we're seeing a lot of support building at that low 27,000 range. We can also see here top traders. This is a delta, basically just telling us that of the traders that trade the most, the more successful ones, they're effectively heavy on shorts today and yesterday. Okay, so this is kind of a good indication letting us know that shorts are still in play, but it doesn't necessarily mean that you want to just start shorting now, because anytime there's heavy shorts, it's typically followed by some longs, okay? So just recognize that. We can also see here too, for the first time in 1 week, we've got more open long positions than short positions, than closed long positions. That being said, they all got liquidated, and we're seeing some new fresh meat on the bone, or the fresh fish, whatever you want to call it. And that's all entering the market here today. So again, a lot of folks are buying the dip at 28,000, 27.6 if you got lucky. And essentially here with the net shorts, we can see that there are less shorts today than yesterday, so they're starting to close their positions. Taking a look at the shorts, let's go ahead and see here. It's going to be a little bit of a funky chart just based on the dramatic drop. In fact, we can go ahead and zoom in a little bit. And yeah, so let's take a quick look at the longs, kind of see where they're at. We probably got some late longs here, right there at about 27.8. But most of the recent longs, which were originally late longs because they were trying to buy the dip at 28,000, they're underwater at 28.5. Okay, so we got a lot of folks still at 28.5 that haven't been closed out. Some were liquidated, but we can take a look here at shorts. Majority of the shorts, these are some late shorts here at about 28.2 to about 28 even. So I'm not super happy about that, or I think it's a bad idea to short at this point, because again, this is when late shorts get wrecked. A lot of times you don't want to be late to the game here, right? You kind of miss the opportunity if to short. You might want to consider more of a long-term bias or long position bias on the short-term time frame. All right, again, just some insight there. Okay, so 4-hour time frame, what are we looking at here? Well, massively overextended, big surprise. We are overextended leading into 29,000. And we've just been in massive overtime. So 1, 2, 3, 4, 5, 6, 7 extra candles into this overextension. So there's no doubt that this is run its course. Okay, doesn't mean it's just going to instantly turn around, but it does imply that we're probably going to see some kind of recovery. We are at 30 on the RSI. Sorry, 11 at the RSI. 30 is a long time ago, right? We left 30 in the dust when we broke that extra overextension. Okay, so again, buying the dip on an overextension isn't always the best plan, which is why you don't necessarily want to go heavy long right now. But everything else we looked at so far, there's a decent chance that we could see the price recover to this most recent support level, about 28,527. So 28.7 is the new resistance level. It was previous support leading into last night. Okay. Again, things can change pretty quick, but that's where we're at. That being said, 4 hours still looks quite bearish. So again, you take a long carefully. Okay. Simply put, overextension. What do you know? We've have multiple nines in a row. We've got 1, 2, 3 nines. So we've been running for 36 hours straight in the same direction. Okay. And you know what they say? Typically, when you have things that come in multiples of threes, oftentimes will reverse themselves. So just say for example, this is the third red day, which hypothetically you could state that considering we've had 3 strong red candles. The fourth day will typically be a green day. And this is basically 3 black crows, or the inverse is 3 white soldiers, when the fourth day essentially is going to be the inverse. So we can summarize that tomorrow should be a green day based on that sentiment. But looking at the hourly, we are fully overextended. Ichimoku Cloud tells us that we're still in good shape. Again, leave your long positions open, not a reason to kind of leave your shorts open. Don't drop your shorts. And in this case here, of course, we can see that the price action is still looking pretty safe for a short position. So it is letting us know that you may want to consider keeping your short position open, but it wouldn't be terrible to open a second position, in my opinion, to hedge that with a long, because there's a good chance we could see this short-term relief rally up to, again, 28.5, 28.7. That seems likely and probable. Okay, so what last thing we want to do here? Last thing we want to do is draw some fibs here so I can go ahead and send out a playout chart, because I send these out on my Twitter daily. Same thing with Telegram as well, just kind of giving us a summarization of what's going to happen next, right? So be sure to check that out. Take a look at that. That's also available in our Discord. I have the playout charts here as well, where you can see pretty much every single coin that I'm covering and what the potential direction might look like. People like to have that kind of, bird's eye view, I guess you could say. But anyways, I'll include this on here as well so we can kind of see where we're at. But for lack of better terms, I think we've tentatively hit our bottom at 27.6. Slight relief rally up to 28.5. But I'd be very careful taking a long at 28.5 to 28.7 range. There's a good chance we'll see that rejection. The price will come back down to finish what it started here by completing this fair value gap at low 27 range. So if I were you and you're just more of a spot trader, 27.6, 27.1 would be some good opportunities there. I'll actually include that in my playout chart today, just to give you some ideas of where to dollar cost average. But again, I filled my bag at 28.5 and 28,000 even. Missed my fill at 27.5. So it's okay. We're getting close. I think we'll still hit that eventually. That said, that's where we're at. I hope this makes sense. Sorry for long-winded explanations here today, but I think it's important to understand those things. And again, if you want to survive these markets, low position size, low leverage, these are just things that you want to I would recommend doing. I see a lot of brand new traders coming over to our trades and then or to our community rather, and seeing some of our experienced traders posting 20, 30, 40, 50x trades. And I got to tell you that that's a path to the dark side. It's a very difficult thing to just jump into. You got to be very focused and driven and use specific risk tolerance. You got to be okay with cutting your losses. Those are all things I teach in my trading academy. So if you want to become part of our trading community, of course, link down below. We have a summer sale right now for the month of August. Lock in your rate for your entire membership. So it's pretty cool. You get trade signals and, of course, quite a handful of other awesome premium features. So be sure to check that out. Anyways, I hope you have a good rest of your day. Thank you again so much for joining me here. Have a good rest of your week too, if you're whatever you're doing. All right. Best of luck. We'll see you tomorrow. Have a good rest of your day. Thank you.